Good morning, good morning, good morning, good morning, guys. My name is Sean Dexter, and I welcome you back to the Mango Grove for your daily Bitcoin and market analysis. Alrighty, today we're going to be doing a update on the Dixie cross, the Dixie Death Cross that we've been talking about for a few weeks now, right? We've been anticipating this Death Cross. Why? Because we found when we did a historical analysis going all the way back through all of Bitcoin's history that every time Dixie seems to have a cross like this, Bitcoin has a rally, whether it be a mini rally of a few 100% or a big rally of several 100%, 1000% even, right? So we'll be giving you guys an update on this one because we do have a confirmation on the Dixie Death Cross, right? And today we'll also be combining it with what we're seeing on the monthly stochastics, because the combination of what's going on over here on the Death Cross as well as the monthly stochastics has never happened before in Bitcoin. So we might be putting in a recipe for a bigger move than many people may expect, a more volatile move. But remember, guys, this is only one piece of a larger puzzle. And if we get a volatile move, you guys know exactly how I feel about that. But we'll get back to that very, very soon. I do want to quickly note that this death cross that we are seeing right now on Dixie is in large part happening because of what is going on in the Japanese yen, right? In the Japanese bond market. So I'm not going to go into the technical details, guys, but essentially what's been happening is that market participants have been forced to get out of their US treasuries, thereby selling the US dollar, right? So they are weakening the US dollar by selling it, and they are buying the Japanese yen, thereby strengthening the Japanese yen. And the Japanese yen is a major component of the Dixie basket. The Dixie is a basket of currencies, and it's not equally weighted across currencies, right? The yen is a massive component of the Dixie basket. So we are seeing the dollar, which is a huge component of the Dixie basket, of course, going down while the yen going up, right? Which is essentially putting downward pressure on the dollar. By the way, this over here is the monthly time frame, the US dollar against the Japanese yen, and you are seeing that over the past 3 months, we've seen a massive pullback, right? So the weakness in Dixie and the death cross is in large part due to what's going on with the yen. But that doesn't change the fact that our financial conditions are loosening because of this, right? Because remember what I explained to you guys, when financial conditions loosen, we get increased liquidity conditions, better liquidity conditions, and market participants are more eager to place bets on risk assets, at least on the margin. So to quickly explain what I mean by that, let's say you have a student loan debt of around 100,000 US dollars. So let's go and write that down there, 100K USD, right? But then after you're done your schooling, you move to Canada and you get a job in Canada, okay? So you're earning in Canadian dollars, and the Canadian dollar is a lot weaker than the US dollar as things currently stand, right? So let's say to pay back this $100,000, you need to earn $130,000 CAD, okay? Now, if the US dollar weakens, right, and comes to parity with the Canadian dollar at a 1-to-1 ratio, right, you no longer need to pay $130,000. You need to only pay $100,000, right? So the Dixie weakening essentially saved you $30,000 CAD for you to be able to allocate elsewhere, perhaps into equity markets, perhaps into Bitcoin, right? And you guys can go ahead and use this to understand how sovereign debt is affected in the same way, right? When the Dixie goes down, debt that is denominated in dollars gets a lot cheaper for countries right across the world to be able to pay back their debt, thereby allowing them to have liquidity for other means. Alrighty, now let's get started with the fun stuff. Here we have Dixie on our bottom panel, and on the top panel we have Bitcoin. I'm going to go ahead and just temporarily hide the Bitcoin chart, right? Just put it up there for a tad bit, and as you guys can see, we do have a confirmed cross right over here on Dixie, right? The green line, by the way, for those of you who are just joining us on this journey, on the story that we've been putting together for 6 weeks now, right? Actually, far more than that now. It's been more like like 8 to 10 weeks. So if you guys are just joining us, hey, subscribe to the Mango fam. We've been putting together a story that has been unfolding now, and things are coming together very, very nicely, but there's so much more to come. I found some really, really cool stuff for you guys that you guys are going to freaking love. So hit that subscribe button. And for the rest of you who have been enjoying this content, let me know by hitting that like button. I've been monitoring your comments and your likes, and it's been motivating me to keep this content coming up on a daily basis. As you guys can probably tell, I'm really tired and exhausted today, but I'm here regardless of how tired I am because of you guys. So thank you for keeping me motivated. All right, let's go ahead and continue. What's going on over here? We have our Dixie Death Cross, right? And we identified something really cool. Around 4 to 6 weeks ago, we talked about how every time Dixie has had a death cross, right? We've gone ahead and marked each one of those times, and we've corresponded it with a corresponding vertical line on Bitcoin as well, going back all the way to 2012, guys. That's 11 years of price action, and we found that Bitcoin has had a rally each time Dixie has had that death cross. Because remember, Dixie having a death cross is a indication or a trend of improving financial conditions, right? Because the Dixie having a death cross means a downtrend on Dixie, the dollar weakening, which means a uptrend of improving financial conditions. And around 2 minutes ago, I explained how improving financial conditions increases people's propensity to allocate towards risk markets. So we found that each time Dixie has had the death cross, Bitcoin has had a rally. Now, there are two types of death crosses that could happen. We could have a cross that stays cross only for like a few months and then it uncrosses, which we call a fake cross. And we could have a prolonged death cross that is a long, almost a year-long, multi-year-long trend on a weakening dollar that causes a multi-year-long bull run on Bitcoin, right? So usually we get the first cross, which is a mini cross, a fake cross, which causes a rally on Bitcoin, but it's not as big as the massive bull run, right? The parabolic run. But then we do get the real cross after the fake cross, which does lead to a massive run. Remember, guys, just because that's how things have happened in the past doesn't mean it needs to happen again the same way in the future as well. But it's something that we can use as a template, as a framework to understand human behavior based on improving liquidity conditions, right? And now that we do have our death cross, we can go ahead and mark out our corresponding vertical line for the current juncture on Bitcoin, and it's right over here. By the way, guys, we're looking at Bitcoin on the weekly time frame, and we're looking at the Dixie on the daily time frame, right? So the death cross is based on the US dollar daily time frame. Okay, so I want to quickly talk about this vertical line that we drew in for the Dixie, because if you guys do remember, we had tried to forecast when this death cross was going to happen, and we said that if things keep going the way they are with this aggressive downtrend on Dixie, we're likely going to have it by the end of Jan. And what do you know, it's Jan 20th and the Dixie cross is here. I missed it by a couple of days. If the Dixie had waited just a couple more days, I would have had it perfectly. But hey, close enough. Let's go ahead and now just quickly go through how Bitcoin has reacted through all of these crosses, because I kind of want to emphasize the importance of the first death cross perhaps not being as aggressive of a run, and we can kind of guard ourselves against that, right? In case the markets do get a little bit more crazy. This is something that we can use in confluence with what we talked about in our video from 2 days ago, right? The Ichimoku thesis, where, hey, as long as the cloud is red, we cannot get too crazy with our Bitcoin upside targets, right? Hey, we are Bitcoin bulls, but we are reasonable Bitcoin bulls. All right, so let's see what we have over here. We got our first death cross October 12th, right? And it uncrossed somewhere around here. You guys probably can't see in the bottom panel, but it was somewhere mid-cycle, Feb 2013, right? So we had a good 183% move. I should probably mark that out, like I have marked out for the other uncrosses right over there. Okay, cool. So I also want to quickly note for you guys that a death cross has led to a Bitcoin bull market, right? But a golden cross has not led to a Bitcoin bear market, right? Or rather, this is how I should say it. A golden cross has not been a good timer for Bitcoin top. It has either missed the top by a huge margin, or if you try to sell over there, you would have missed a huge portion of the run. So all I'm trying to say is you can use the death cross to understand improving liquidity conditions, but it's not a good gauge to try to time the top of a Bitcoin market, right? Keep an eye on it, yes, but don't try to use that one single indicator to time the top of the market. So the first death cross gave us a good 180% move, right? Yeah, around 180 to 200% move. Then the next death cross, which was the trending death cross, gave us the parabolic run all the way to $1,000 Bitcoin. That was a 1000% move from the time of that cross to the top, right? Give or take. Okay, so then after that, we had a massive bear market, a long, prolonged bear market, which, by the way, only had the golden cross somewhere around here, where you would have missed a good 50% of the top. So don't try to use the golden crosses to time the tops, guys. Then you got your death cross, your first death cross, which is usually the fake cross, March 2016, right? And you had a run from here to the top, which will give you a 150% move. And if you mark it to the uncross or the golden cross, it would have given you a good 68% move, right? That was the fake cross. The real cross, the trending cross, came in when Bitcoin was around $2,000, and you had a move all the way to $20,000 for a good 1000% move. Okay, now for the 2019 bull market, you got your first fake cross right over here, December 2019, Jan 2020-ish, and Bitcoin ran from around $6,000 all the way up to $10,000 for a 60% move, right? And then COVID hit, markets were kind of pricing that in by rushing back into dollars, gave us the clues, and we had the big dump. The real death cross, the trending death cross, came in only when Bitcoin was around $8,000, June 2020, right? And that took Bitcoin for a good 600% move. So definitely diminishing returns that you guys are probably noticing as the market matures. So keep that in mind as well. Again, just small pieces of the puzzle that we're putting together for a larger story. And now we have another death cross. The big question is this a trending death cross, or is this one of those fake death crosses that cross and then immediately uncross before we get the real cross? We can't really know ahead of time. Okay, just because it has happened in the past doesn't mean it needs to happen again. However, there is something really, really interesting going on in regards to the monthly time frame, the monthly Stochs, that gives this a little bit more credence, right? I'm going to switch on over to the monthly time frame over here. Okay, now we're seeing the same Bitcoin cycle across all the years, leading all the way back to 2010 actually to 2023, right? This is the Bitcoin index, and I have the stochastics right over here. And this is what's really, really interesting. If you guys go ahead and examine the monthly stochastics and look for the periods where the Stochs have bottomed, right? So you're looking for it to be underneath the 20 zone, as well as crossing bullish, right? So you want to see the blue cross over the red, right? If you go ahead and mark out each one of these times, it's happened only 4 times in Bitcoin's history, right? And that's considering we actually do get this cross by the end of the month, which I think we will, as long as Bitcoin holds its current portion, doesn't see a sell-off, okay? The other 3 times that this has happened, you guys will notice that this has lined up very, very well with the bottoms of the Bitcoin markets, right? It's not caught it perfectly, but it doesn't need to, right? We're talking about a multi-year run over here, right? So right over here, you guys can see that if you had entered, you wouldn't have entered in this run over here, but you would have entered somewhere around $5 Bitcoin, and that would have taken you all the way through all of this, right? To, well, $1,000 Bitcoin. The next time, it would have got you in pretty much at the bottom again at around $300. The bottom was around 224-ish. You would have gotten at around $300, $400, right? Not bad. And it took you all the way to $20,000. The next time you would have gotten in was around $3,000 to $4,000 Bitcoin, and it took you to $60,000. Now, this has happened only 3 times in the past, where the Stochs in the monthly has bottomed and started twisting. This time, we are seeing it happen again, right? Jan 2023. Interestingly enough, guys, if you go ahead and plot out the time difference between each of these crosses, it's around 38 to 42 months, right? So give or take around three and a half to 4 years, you are seeing the monthly Stochs cross. Now let's go ahead and combine this with what we are seeing on our Dixie chart, right? We went over each one of the occurrences where Dixie has crossed bullish, right? And this was on Bitcoin's weekly. Over here, we're looking at the stochastics and Bitcoin's monthly, correct? What I've also done for you guys is I've marked out each one of the Dixie crosses on this chart. So let me go ahead and hide our drawings temporarily. In fact, we don't need any of this. We can delete it. Okay, let's go ahead and unhide our Dixie drawings right over here. All right, so now what we have on our charts is our stochastics that have timed the bottom of the Bitcoin markets pretty well, going all the way back to 2011. And we also have the Dixie death crosses marked out on Bitcoin that have also lined up with Bitcoin rallies. Okay, so remember, Stochs have time bottoms, and Dixie has the Dixie death crosses has been really good for timing Bitcoin rallies, whether it's been a small rally of around 100% or a multi 100% rally leading up to thousands of percents. Right, we have both of these marked out. What you guys may be noticing is that these haven't ever corresponded before, right? You guys can see that the green vertical lines have not coincided with the bottoms of our Stochs, which have been marked out with these yellow circles over here, right? So you don't see any intersection of these green vertical lines and the yellow circles up until today. This is the first time, guys, Jan 2023, that we are seeing the bottoming of the monthly stochastics with a potential cross coming up next month, lining up with the Dixie death cross, right? It's happening at the same time. The Dixie death cross towards the end of the month, leading into the monthly stochastics perhaps crossing bullish, right? So this is the first time we are seeing this, right? So while we have gone through an exercise where we have identified that the first cross on Dixie has led to a mini rally, a fake cross, so to speak, we have also identified that we are now seeing confluence with a major indicator that has not happened in the past before. So all of this is to say that markets do not repeat, they rhyme, and we need to stay fluid and we need to be dynamic as traders and investors, right? So don't look for the same thing to happen. And that's why how the story unfolds over the coming weeks and months is going to be very important. We're going watching, assessing, and analyzing. A lot of market participants are going to be making the mistake of trying to look towards the past and react accordingly. We are not going to be doing that. We are going to be using the past as a guide, okay, as a guide to learn and study from. But the future will very rarely be exactly the same. All right, so we're going to wrap it up over there for today, guys. I'm really tired. I hope you guys enjoyed this video. Please let me know in the comments if you guys did. Hit the like button, hit the subscribe button, and your comments, guys, have been so motivating. Please keep them coming. I'll see you guys in the next one. Enjoy your weekend. Ciao.